Welcome to this episode 40th of Real Estate Chat with
Robert Ede.
and Jodner Perez. We were talking about tinnitus, congestion, and this is the best way to set up today's episode, which, as Robert dubs it, a three-way market squeeze. So if I sound weird, it's because I'm congested. It feels like I'm getting squeezed, but so is the market. And I'm just looking at Robert's notes here because he explains this very well. And he's going to go through detail about this three-way market squeeze involving a diminished amount of new listings and what other variables factor into that new listing calculation. Reduction of inventory due to strategy. So this is a deliberate effect on the inventory. And of course, other factors, the third factor, including registrants working a wider area, looking at a vast market, and a whole bunch of other stuff that we're going to talk about today that Robert is going to go through his charts, go through some facts about what's happening in the market, and make an explanation of what's going on. And in fact, it's today's May 31st, the final day of market trading on a Toronto Regional Real Estate Board and real estate boards around the globe. The stats will be released in a few days, and we're going to get Robert's sort of insight and forecast into that. Robert, without further ado, let's go to your first graph and let's dissect what's happened up to this point in this market.
Okay. Truly, everything is supply and demand. So this is inventory, and it's the only reliable number we get. It's a snapshot on the last day of a month, every month, and it tells us what's active. And there's no ifs, ands, or buts about it. So I chart this every day. We'll look at that a little bit later. And so it's gone up a little bit to what I'm calling 12.35, but that's still 28% short of the 10-year average, which should be around 17,000. So there's one squeeze, that there's not the regular amount of inventory that you would see in May. May is a prime time month. It's either March or it's April or it's May or it's June, but that's always your hottest month. And we're short, as everyone knows, on inventory. So that's how much we're short. Now, this is the other aspect, that new listings are the lifeblood. It's the fresh properties. It's the things we haven't seen ever before. It's the lady that's lived in her house for 91 years, 31 years, whatever it is, fixed it all, make everything perfect. So it's just a real little cream puff come on the market, which is what every first-time buyer wants, because there's nothing to do except to paint the kitchen and paint the master bedroom. And there's fewer of those new listings. Again, the same 29% off. The 10-year average should be 18. I'm estimating it to be 13. And that's what that line in there, the blue line, is 13. And we have our other anomaly where some of these are do-overs. 2 weeks ago, the same property was put on the market at an artificially low price and with a delayed offer date, thinking that on that delayed offer date, 5 or 7 days from then, they would get 15 offers and they would bid up and get a huge price. And it failed. For one reason or other, they didn't ask low enough. They didn't ask high enough. Whatever it was, they didn't get what they were expecting on offer day. And so they terminate that listing and relist it. Now that ratio of terminates, relists to new, depending on how you count, is somewhere between 13 and 19% every month, going back to when they started publishing it 2 Mays ago. So that's where my red line on there is saying these are do-overs, which is another one of the squeezes, in that when these properties first come out in the market, you can't buy them that day unless you want to pay huge money for them. They will accept a preemptive offer if it's huge, because they're foregoing the opportunity of having a bidding contest on their property. But really, it's not active. You can't buy it that day because they don't want offers that day, and you can't buy it unless you buy it for way over the asking price. So that also was a withdrawal from the choices for buyers. So there's another squeeze. Now, these are guesses, we don't know. So now there are buyers out there. This is looking at the last number of years with souls and souls arranged. And I've been watching this for 2 weeks, and it keeps on plunging, so that now finally May of 2023 is either going to be very little bit above or very little bit below the all-time most terrible month of May in the lockdown of 2020. What? How can that be? That was terrible. How come? Well, if you've got a diminished number of listings, there's only so many buyers. And so those diminished number of buyers are competing against each other for the diminished number of listings. And a certain number of them, make an offer and don't get it. The next time they don't get it, the next time they don't get it, and finally they get it. But that's like 5 offers before they buy one. So it's a diminished pool of buyers and a diminished pool of listings, and they're fighting fiercely. And so you hear about multiple offers, but it's a connivance. It's an arrangement that everybody puts their property under with an artificially low price and a future date, and that's just to concentrate demand on their particular home because it was such an attractive price. And so 10 people will offer on it, but many of those offers are not within the buyer's expectation range, but 2 or 3 of them are, and those people will fight and they will pay the expected price. So it's a successful strategy. They're not going to quit. And if it took them 2 years, 5 years to come up with a solution to coming soon, then I guess in 2 or 5 years, they'll come up with a solution to this. But so far, it hasn't been apparent. So we're going to hear all these people who on the 15th of May said that this is the rip-roaringest, most fantastic, everything going up to the sky with prices and sales and everything like that, saying, oh, well, maybe we better reconsider because prices have certainly gone up, but sales didn't go anywhere. I'm scratching my head. It doesn't make any sense. So it's a squeeze, all right. Okay, now here's our regular school year chart, which has got a lot of years on. There's more than 20 years on, and you can see again here we are. Bang, the green stars are right down at the lowest time. It's the worst month. I've got it as 45, 6, 7, just because it's a cute number. 4, 5, 6, 7 as the worst May in history since the last 28 years, 1996, when the market sort of recovered from the last doldrums. So it's I said it the last time, somebody's going to have egg on their face. And I will admit to saying, I can't figure it out. I can't figure it out. Why did so many people decide in March and April that they were going to pounce back in and drive prices up again? They drove prices up again because there's nothing to pick from, and they thought they were getting a good deal because there was nothing else to pick from, the diminished supply. And I was wrong when I saying there's going to be a huge glut of sellers. Still hasn't arrived. Still hasn't arrived. Inventory is the big culprit. So we'll wait for the experts to tell us their opinion of what it is.
So let me interject here then, because if you look at the pattern of this year, which Robert's graph so very well illustrates, it seemed to have been a back to normal story. But then all of a sudden, if and when this is announced that it was, I mean, it would take a lot for the current stats that Robert has looked at for this to say, oops, you know what, it's not going to end up at 4, 5, 6, 7. It's going to end up at 7-ish, which it's not likely going to happen. But what could possibly explain that for the past couple of months, we were going back to normal, and then all of a sudden just this flip? Like, what was, like, I know we were talking about inventory, I know we're talking about different market squeezes, but there's got to be something else that led to this.
Okay, well, you hit the key ingredient, because all through, when on the bottom of this green line with the big stars, they were 40% off the 10-year average. Then all of a sudden, in March and April, they got to be 20%, 15% off the 10-year average. And now we've gone back to 40, 50%. So there's a cycle, it's a sinusoidal curve that goes up and down, that there was something that caused March and April to go up. And that's the only thing that needs explaining. And you can call it satisfaction that the interest rates were going to not go up any further, and that for 2 years you could work out something, an arrangement to get over the hump until you could refinance it again in 2 years' time. And that there was, you didn't do anything last year because you saw prices falling, and now we come to a bottom, and so you're going to buy at the bottom, whereas it's going up again, so you're assured you're not making a bad move. And like some people just had to move, and there was a prohibition. It was badly implemented, it was badly announced, it was badly everything. It was a prohibition on non-Canadian, non-resident Canadians buying property that was instituted effective January the 1st. And then I got it modified in February because they saw it was a colossally stupid time to take away that whole segment of the buying market. And there was a huge influx of newly enfranchised buyers again who bought up all kinds of things.
Which
And
will
the
be
amazing,
interesting to see where it goes to June, because from what we're hearing out there in the marketplace during our office meetings, is that there are multiple offers happening. Prices are stable, if not rising. Now, this is not obviously going to be everywhere, but we are seeing a higher price now relative to earlier this year. But this is a surprising number, that a lower amount of sales is still resulting in stabilized prices. Inventory, even though it's low, like there was no surprise of all of a sudden a big increase either of inventory or a big decrease in inventory. But this sales figure is
it's a head scratcher for everybody who thinks they know something about something.
exactly.
So this is a blow up of a chart that I do every single day. And I chart, or I take it from the MLS, and then I put on there, what are the number of listings? What is inventory? What are the number of condos? What are the number of freeholds? And amazingly enough, the ratios are exactly the same. In between 416 and 905, it's still 60-40. And the if the colors at the very top are where I've tried to find out what the maximum was in the last 2 years, 730 days. So it's rolling. And then beneath that is the minimum. What was what we're seeing now is a percentage of the minimum, and what we're seeing now as a percentage of the average. So we're 115%, 14.9% of what the last 2 years was in inventory. Now, there was a time when there was hardly any inventory because it was selling like crazy. Other times when there was lots. So we're 115% of that. And then the next one down is of the last 6 months. We're 120% of the last 6 months. And we're 115% of the last 3 months. So there's nothing terribly unusual here. It's, it was a boom, it was an unboom, and now we're a little bit ahead of it. But you knew that. And then we go on to how much of it's condos, how much of it's freehold. The only thing that this does show, which was, it was too small, because it's an 8.5 by 11 sheet with quite small typing. So I cut half of it and blew it up so it would be bigger, is that because of the reduced number of sales and slightly creeping up greater inventory, the months of inventory has gone up by over 1 month. It was like 1.45 something. Now it's gone up to 2.56 something or other. So it's still low, but that's the thing that's exhibited the biggest change, that ratio. So I think that's all the charts. And we rushed through a number of the things in this three-way market squeeze. And the only thing that I'm going to say is that, like, if you're a registered, you're going to make some money. And somebody wants to buy something, want to pay $1.2 million. And in your regular marketplace that you watch, there's nothing for sale at $1.2 million. So you have to go somewhere where that same kind of accommodation is available at that price for your customer. The customer is a transferee, or maybe they've decided, or they sold their condo, or whatever the reason, they're absolutely serious about buying it. So you have to take them from your regular trading area at Yonge and Eglinton to the East End, or you got to take them to Markham, or you got to take them to Pickering. And if you look at the solds and you look at the cooperating broker, you see there's a lot of downtown individuals, registered members of the Toronto Real Estate Board, that are now selling properties far afield. Now they have assistants who might be doing that, but they're going out to areas where they're not really familiar. So they're maybe not taking into consideration every single factor except for price. They're getting a property with a suitable size at a suitable price, and they're making the sale. And making the sale is the name of the game. It is not a profession. We don't profess to do anything. We're supposed to promise to do the best for the client, but we promise to take care of ourselves first. And anybody who says anything other than that is just, spouting wonderful platitudes. So
take care of everybody. Take care of yourself. If you're watching this and taking care of yourself in the real estate market, make sure you click like and make sure you subscribe. And there's not much to dislike here aside from the market squeeze and my voice. But basically, I mean, this is just the interesting anomaly of the sales, and it's a head scratcher. And we're gonna have to see what happens in the rest of the year, because this was supposed to be the year where the real estate organized body said it should pick up at the latter part of the year, and we're now at that latter part of the year. Prices are doing okay. Inventory is what it is, but sales diminishing. We're gonna have to see what happens with June. Like, does it become the worst June, worst July, worst summer of all time, or what? There's, interest rates may go up according to what some commenters are saying, and this is one of those time will tell. And these stats are, aside from Robert making forecasts, what actually gets reported is looking in the rear view mirror of what has happened. And so if you're looking forward, make sure you listen to this advice. Make sure you talk to your realtor, your professionals that you work with. Make sure you leave your comments on this episode of Real Estate Chat, and we will see you in the next one. Bye for now.
Yeah.